Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Hope you're having a fantastic day. Taking a look here at Bitcoin, see what's going on. Double checking a few important factors here. We're going to talk about this resistance range that was retested and effectively rejected. But you got to understand that was CPI data, and that came in a little hot and effectively pulled the price action down. But if we look at how well the price has recovered here in the last couple of hours since we tentatively bottomed out at the 80,600 mark, we can see the price pushing back up here. So I wouldn't be surprised if we retest 84,000, push up to sweep that CME gap, that resistance range, and then potentially pull back from there. So just thinking out loud here, based on what I see, it may be advantageous to consider a long to 84,000 and then to short 84 to 86K back down. That's just kind of my overall thought. But we're going to double check and kind of see if that's even viable, maybe a good option, or if it's a terrible idea. You never truly know. That's why you want to take a look at the charts and kind of go into it with like, okay, well, this is maybe something I'm looking for. But truth is, we want to look at the charts right now and convince ourselves not to take a trade. That's really how it boils down to. And unfortunately, tons of missed opportunity in the market. Like, it is super, super difficult to catch any really good longer hold trades. So just be mindful. You got to kind of use lower leverage and maybe lower position size to ensure you're not getting destroyed with all these crazy wicks here. But let's take a look here. Before we get started, hit the like button, comment below. Really appreciate it. Okay, so Bitcoin. Last 84,000. We had some liquidation there at about 84 to 84.5. There are some late shorts here between 84.5 and 86, and some previous shorts above that price action. But if we look, it's not like a massive amount of liquidation in that range. It's just kind of that natural resistance range based on a handful of factors, but there's also that CME gap, which we can look at here shortly. So you understand more specifically that there's some incentive to push your price action to that 84 to 86,000 range. We can see liquidation delta starting to shift momentum here. It isn't like fully shifted at all by any stretch. We're still on the bearish side of things, but this is usually when you start getting closer to zero or break even, the price action is more likely to reverse its role and to effectively continue higher. Now we can see on the charts that this $84,000 range is holding pretty well as a resistance. But if we retest that again, there's a strong chance we're going to break through that and or sweep that liquidation just above, but more importantly, that CME gap above that price. We can see open interest is starting to accumulate between 79.80 and roughly 81,000, just some easy round numbers to remember. We got some good support here. So it basically just implies when the price action pulls back, people are buying these dips here more so than before, okay? And the key takeaway here is that we're not free falling anymore. That does tend to build a good, strong foundational base. Let's take a quick look at the daily time frame and kind of see if there's anything kind of telling us here. I would say there's probably nothing. There's no such thing as a hidden bullish divergence. And even if there was such a thing, it wouldn't be present on the daily time frame because everything is kind of just letting us know that the overall trend is down. Doesn't mean you can't still take some wins between now and then, along from 82 to 84. That still seems viable. But at this point here, from a daily perspective, we have no real momentum shift. Nothing's happening that's like monumental, and really just need to recognize that as long as we remain below both these moving averages, we're going to be pretty much on the bearish side of things. That's the best way to describe it. And once more, the SMAs, they're not like support and resistances. They're just kind of areas of confluence, kind of letting us know what side of the rails you're on, okay? And if you're below and going against the grain, you're going to find more difficulty trying to find wins in that direction. So right now, when we take a look here, we can see the 20-day SMA right there hanging out with this descending trend. So this descending trend line I drew out yesterday based on the 20-day SMA. That's usually how I like to draw my trend lines on the 4-hour time frame. And we can see the 50 is kind of hanging out this $85,000 mark, so 85.3. So the simple way to understand it here is that with this momentum here, with us establishing higher highs and higher lows so far, there's a decent chance we're going to see further upside. And the main reason why, too, isn't just because of that pattern. There's a lot of reasons as to why we're developing this resistance and support range. So we're kind of working ourselves within a channel now. And since we derive from the downside, it's more commonplace to see the price action go higher because of that. Okay, you have that momentum, so to speak. Granted, we have momentum going into a resistance, so we got to be mindful that 84 to 86K is that range to be very aware of. So you don't just, for example, if you take a long right now, you don't set a take profit target at 87,000. You do it within this CME gap range. And let me just go ahead and clarify and show you here. This is effectively where we're at right now. You can see the price action once it swept its lower CME gap. We have this upper range of 84.3 to roughly 86,000. Okay, so that CME gap still exists, and it's more than likely going to be the next target. If we look at the hourly time frame, we can recognize here as well that the Ichimoku cloud is going to confirm that we are, if I'm not mistaken, we're still above it, which we are. So this really just kind of implies here that we're in good shape to see the price action likely continue higher. Well, this is not a perfect situation because the lagging span is getting closer to the price action, and the conversion line is still above the baseline. That's good, but the general consensus is that being above the cloud, being above that support range that we're starting to see, this local high reestablished as a new low, it seems like this 81,000 is a tentative bottom. Okay, so that's the rough estimate of where we're at here. It seems viable at this point, based on momentum and this nice little pattern here that we're seeing, that further upside would make sense on a short-term perspective. But don't fool yourself, folks. We're still, from a macro consensus here, that the overall scenario is moving down. We are essentially degrading and or retracing, so to speak. But this is a good start. So this is kind of what you want to look for that trend reversal. But we're not there yet. It's going to take quite a few more days of this kind of price action to get to that bullish type of convergence. For right now, we're seeing a smaller time frame shift in momentum, and it's best to ride that wave. And I'm still on board, by the way, with a short in the 84 to 86K range. Just unfortunately, I woke up this morning right about here, and I'm not going to set a short at 84,000 in the blind, even though I did recommend yesterday in my trade alerts shorting at 84,000. Okay, so in this regard here, we were looking for a short at 84 with a take profit of 80 to 82K. All right, see, these are rough estimates, but that's generally what I was looking for. Now that that ship has sailed, we got to calibrate and potentially consider something different, at least for the moment. All right, so that's kind of where we're at there. I hope that makes sense. I'll post my playout chart on our Twitter, Telegram, and Discord. It looks a little something like this if you're not familiar. And if you want to join our Premium Plus trading bot, this guy is killing it. It's basically just a day trading strategy that I have that scalps the market. We're up a pretty decent amount on just small $50 per trade. It keeps growing and growing and growing. So it's pretty cool stuff there. You can kind of see here with the closed trades, there's quite a lot of success with these trades. It just consistently taking profit. Granted, there are some stops here and there, but the success rate is pretty high, and you'll see that we're consistently just earning profit. So it's a pretty cool thing. Anyways, check it out, and congrats to our community members for that new strategy working out very well. I look forward to working with you. Have a good rest of your day. We'll see you in the next one. Take care.